Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm watching supply drop like a stone, 6406. Show me that chart.
6406, Noah, that is what it is. And that is, again, a look at overall supply, looking at the active listings out there, and it is just slowly deflating in front of our eyes.
Yeah, there is a contraction of inventory this summer, and it's because there is just not a lot of stuff coming on. There's a lot more stuff going off, which we will show you again shortly. But before we do that, let's take a look at the Manhattan demand pending sales. That looks like it's ticking down to 5158. Johnny, show me that chart.
It is ticking down too, although not as much. That's only down about 1.5% from last week. So again, the pattern holds true that supply is receding faster than pending sales.
Right. And that's really the story, Johnny, is that supply is falling faster than pending sales. And if I look at those weeklies, I mean, I just want to point out really quick that there is now more deals signed than inventory. Let's go to the charts to show it to you. When I'm looking at supply, only 282 things came on the market. Looks like it's up a tad. Johnny, show me that chart.
It is up a tad. And if you're looking at the percentage basis in terms of last week, you'd see it's up almost 4%. And you think, oh, that's great. We got some new supply coming on. But just wait until we look at the contract signs.
And when I look at those contracts signed, we are over 300 for August, which is just incredible. August and September are typically are two of our slowest calendar months of the year for deal volume. That is not what is happening right now. Johnny, show me that chart.
Yeah, 308. So that's up almost 3.5%. So it's basically mimicking the supply side, but I mean, it's just dwarfing it in terms of volume. I think this is one of the first times, though, that I've actually seen more contract signs put on a weekly basis than supply. And I'm can't think off the top of my head when the last time I saw that was.
I can't recall that either. I mean, I don't want to underestimate that. It is a strange dynamic. It is, buyers are just there right now. There's dwindling inventory. And when I look at the 1 month to kind of filter out the weekly noise, I mean, we're approaching the same level, 1314 contracts signed over a 30-day period, 1430 stuff coming on, 850 going off. We have a complete net deficit of inventory. That's why the market pulse is going up, is because sellers are finding less competition out there and the buyers are just not going away. They're just
exactly
there.
Right.
So market's hot. So Johnny, let's shift really quick because, you know, we got price action coming on here. People often confuse liquidity for price action, right? I try to explain that these are two different things. And even though the liquidity, the bids, the relationship between deal volume and new supply, that's kind of like liquidity. That's at a level probably back at the 2015 peak. But when we talk about pricing, we're kind of only back at 2019. We only recovered the COVID discount. We're not much further back than that. But when I think about future pricing pressures, this is a chart that you pulled out, John. Why don't you please explain this very clearly, why future pricing pressure for Manhattan might have a little bit of a pop coming up?
Yeah, so I'm just going to warn everybody, there's a lot going on this chart, so bear with me while I explain it. I'm going to start with the two lines. That blue line there, that's the median sale price as recorded on the sale date. So we just take everything as they close. What's the date it closed? Great, that populates that line. The red line is looking at median sale price, but shifting it when it was signed into contract. And this is all by quarter. So that last red line, that big pop, is this most recent quarter, which started in July. So clearly it's got a lot more probably cash deals, higher price deals. So it's definitely going to come down a little bit. But what I think is really interesting is when you lay these on top of each other, and then you look at that the yellow column, what's that? That's pending sales. So you have this giant push up in the median price for the recent ones in terms of contract signed. And there's a lot of power behind that number. So yes, I do expect it's a very, very early look at what's been closed so far. And I do expect that red line to certainly come back down. When you look at the amount of pending sales behind it, you get the sense that it's not going to come below that blue line. It's going to be leading that blue line higher in the coming months here.
Yeah, there's a lot of pending sales to funnel through the system. And I put this little visualization up here to show you guys that, you know, the general flow of deal volume and closed deals in Manhattan, you signed something in May, right? That's kind of when the deal was done at that moment in time. And then you got to wait, right? You got to wait 2-3 months for the close. That's July. And then you got to wait more. You got to wait another couple of weeks for that ACRA sale to file. So that red line is really time shifting back to May. That period in May right over here when that deal was signed. So if you think about the leading indicator nature, it's probably maybe a couple of months. It's bridging this gap right here between signed and closed. And that's why when we look at this, and again, I'm glad, John, you pointed out that these early numbers tend to be on the higher side and then come down. So we're giving you an early look at Q3. And what Q3 is going to be booked by is the blue line. That's the key. That's closed by sale date. That is how the industry does it. Right? The industry does not do it how we do it. We do that just to give you a leading indicator of what things might be going.
That's right.
With the cautious note of noise, right? But that blue line is where those numbers are going to be really booked. And when I take a look at Q3 right now, we're only slightly higher than Q2 right now at this moment in time. It does not reflect what this red line is. And again, that's because the red line is just a few months ahead. So that might portend what we're looking at as the next 4 to 8 weeks of deal volume. We might just have a little pop. I don't think it's going to be this big as the red line, but it might just be something notable that we're not quite seeing yet, but is yet to come. It's an interesting take nonetheless.
Yeah, you're exactly right. There's a lot of noise there, but hey, listen, we're all professionals here. So we want you to see what we see. We're very transparent, and it just, we want to give you a look around the corner here.
Yeah, and it's just bringing out all the data, and it's good data, and it's just a matter of interpretation. So we'll keep an eye on it. We're going to give you guys a look at Q3 as more data comes in. We'll tell you whether or not that pop is happening, or maybe that's being pushed off to Q4. I don't know. We'll see what happens when time comes. But Johnny, thank you for bringing up all that data for everybody to see. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, if you guys got questions, we got answers. Please visit our forum right down here. Other than that, I wish you guys a wonderful weekend, and we'll catch you next time.